Well, the government's credibility with the small business community is on the line tonight after it backed away from confirming the start date for the planned cut to the company tax rate. The obfuscation comes as the legislation for the mining resources rent tax, which is to pay for the tax cut, prepares for a bumpy ride through the Senate. Andrew Robertson reports.
Helping business was a key plank of last year's federal budget, with the government recognising that small business in particular was struggling.
We will give small business a head start on the company tax cut that will be funded by our minerals resource rent tax.
With the budget papers indicating that cut to the company tax rate would start this year. Today on ABC Radio, the Finance Minister was telling a different story.
In terms of timing, ultimately that's a matter for the Parliament. We don't control. We don't control, as you know, the Parliament.
Making life difficult for the government is that it separated the tax cut legislation from the legislation for the minerals resource rent tax, something the Greens, who support the government needs, are not happy about.
The two carriages go together. The government might want to shunt one off onto the side rail. Well, we're waiting to see it hitch back up again. And off we go together to the July 1st station waiting down the line.
Which means the timing of the small business company tax cut is now up in the air.
Well, it only reinforces exactly what I'm thinking at the moment. I just don't believe the government cares about small business.
Andrew Bray operates 2 supermarkets on Sydney's northern beaches. He says trading conditions are tough and he may have to look at his staffing levels if the promised tax cut isn't delivered.
Over the last 24 months, we've actually, in small business, kept a lot of our staff. We haven't seen a lot of them go, unlike big business. So any neglect from the government not to pass on this is just ludicrous, considering the state of the current economy.
The government has yet to reveal why it separated the company tax rate cut from the mineral resource rent tax legislation, and that's prompted suggestions that the numbers may not add up. The MRRT will only generate a fraction of the revenue of its ill-fated predecessor, the Resources Super Profits Tax, but it had still been expected to pay for the lower company tax, as well as higher superannuation contributions and infrastructure fund and small business tax write-offs. Which for the Australian Chamber of Commerce and Industry shows the folly of what it calls horse trading over tax reform.
We realise it's difficult at the moment given the state of the budget, but over the longer term, the medium to longer term, we should think about tax reform and tax reductions which are funded through expenditure reductions.
However, with so many small businesses not incorporated as companies, Greg Evans believes cuts to personal tax rates would be a bigger help than a lower company rate.
As of July 1, we'll then have 3 personal marginal rates which are higher than the company tax rate. Other areas important in terms of tax reform for business include changes to capital gains tax, and for those larger businesses, changes in payroll tax.
Notwithstanding that view, the Chamber of Commerce and Industry agrees with Andrew Bray that it won't be a good look if the government doesn't deliver its promised small business tax rate cut in full and on time.